Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. I wasn't planning to share this video with you guys. I was planning to share the information later on, but I thought this is probably will benefit a lot of the community members. So let's do this, okay? And the reason I say that is because today I'm taking profits, cutting a position that didn't work and rebalancing the portfolio for the next phase of growth. Some stocks have simply run too far, others haven't delivered at all, and today I will be doing live buys so you can see exactly how I'm positioning the portfolio going forward. And it is important to do these things as a basically individual investor, and you basically buying individual stocks and so on. It is important to do these things. So in today's video I'm going to work you through my latest portfolio buys and sells, explain why I'm trimming some positions, why I have decided to sell one stock entirely, and most importantly how I'm basically rebalancing the portfolio for the year ahead, inshallah. And also we'll be doing the buys at the end of the video, so stay tuned for that. So normally around this time every year I look at the portfolio and say what actually is working and what is not working, where am I now or where am I heading. Now I've had basically I put more or less what I needed to do last year in terms of, for those who are watching from the US or anywhere else in the world. Basically in the UK we have what's called the ISA account. ISA accounts is basically a sort of a tax haven sort of a account where we don't get taxed for capital gains and dividends and so on. We can invest up to £20,000 a year, and then that's tax-free money. So anything you basically, if I sell right now Broadcom for example, that £6,000 is mine, okay? So I will not have to pay any taxes. So every year my goal has been over the last basically 5 years to maximize my ISA account, and that's exactly what I did, apart from last year where I think I invested about 15,500 or something like that. So it was about less than £5,000 still remaining, but I couldn't, because I was basically already committed to another project, and for that reason I couldn't do it. And that project is now finished since basically October of this year. I didn't have to put any more money aside for that project, hence why I have been investing a little bit more, and inshallah I still have about £12,350 remaining until basically April, and I will be, inshallah, my goal is to max that ISA account again this year, and I'm going to continue doing that. But also I needed to look at the portfolio and decide, okay, what is actually working and what is not working, and look at the individual companies. So the last few days I haven't recorded anything because I've been busy sort of looking at my own portfolio and say, asking myself these questions. And I've asked those questions and I came up with a plan, and I'm going to share that with you guys. I made some sales. I'll share exactly what they are. I will be making some buys. So we'll be doing some live buys, investing £3,600 over just £3,600 in today's video, inshallah. Again, this is not to show off or anything like that. This is just to me sharing my plan, me sharing my journey with you guys. I'm not a financial advisor. I make mistakes. I probably could have made so much money if I had invested in certain companies over the last whatever years. I could have lost a lot of money, whatever. I probably will lose money. I probably will make money. All of these things is just my own sort of investment philosophies, and I'm basically learning as I go along. And all I'm doing here on YouTube is just to share my journey with you guys. And if it benefits you in any way, I'm genuinely grateful, because if you think about it, there's not that many Muslim brothers and sisters who genuinely share what they do in day to day. I have been doing that for the last 5 years, and I will continue to do that, inshallah. And it is genuinely important, just going back to the portfolio, it is extremely important to just look at your portfolio and see how it's performed. So some stocks in my portfolio have performed extremely well, and basically it's good to problem to have that. So, and then I need to decide, okay, but when a stock runs up far beyond what I believe is reasonable valuation, then I have to think about, okay, do I need to do something about this company? Does the trajectory of the business still look the same as it was whatever years? Okay, and trimming isn't about timing the market or basically calling the top or anything like that. It's just managing the risk, and that's what I'm doing here. So don't take some of these things. I've trimmed a company and I've sold one. Trimming doesn't mean basically I'm timing the market. I'm just saying, okay, there is a little bit of risk involved. So for example, Cummins is one of the companies that I trimmed recently. I trimmed it because I felt like the valuation was gone too high and the expectations moving forward is not as great as it was about a year ago. And even if it is, I genuinely believe it. The stock market basically pulls back a little bit. It's one of the companies that are very vulnerable right now because it is part of that AI group and it's gone up so much. I'm up over 127%. Okay, so taking profit, basically I'm not losing any money, I'm gaining money in the end of the day, and that's what this whole thing is about. Although as a long-term investor you want to keep your winners and basically you get rid of your losers where you can, and of course replace them with the winners that are going to be the future of your portfolios and so on. But at the same time, it's all about managing your risk and portfolio. I hope that sort of makes sense, the rationale behind this. Like I said, I'm basically locking in profits. I'm reducing concentration risk and sort of freeing up capital for better opportunities. And that's basically what I'm trying to do today. So the first company that I actually trimmed today was Rio Tinto. Rio Tinto is one of those companies, and I've never actually shied away about the fact that I've told you from day one, it is one of the companies that I own in this portfolio for the dividends. Okay, it is price appreciation. Is ridiculously volatile company. Is one of those very cyclical businesses. Look at this, okay, over the last basically whatever years, and is heading back to where it was 2020, which is about basically £66. Okay, right now it's about £60 per share. It hasn't been there for quite some time. I've had 133 shares. I bought 100 and I said I'm not buying more. Then I bought more because it went all the way to I think it was 49, close to something like that, just below 50, below my my average. Then I bought more to sort of get to basically about £50. I think it was about 51, 52 when I bought it first. So I averaged down basically the moral of the story, right? So what I decided today was to sell the 33 shares and whatever fractional shares that was there. And I'm going to show you just to be transparent with you guys. And as you can see here, I haven't actually bought. Last time I bought shares was for this company was May basically this year. And at the time, I think, let me actually have a look how much it was each price. Look at that, 44. So it was actually lower than, it was very, very low. That's when I was buying. So I bought them around that time, and since then they paid me that dividend, 144. My dividends from this company is closer, is about £400, I think, and basically when I had 133 shares. So as you can see, basically I've sold about 33 shares, and as you can see here, I made £300 in gains in that one. So I think it's split somehow. I don't know why it's about 300 and basically and £6 or whatever. Okay, so almost made what this company would have given me a year in dividends. Okay, so I've taken that off the table completely, and yeah, so I've now still got 100 shares. Am I selling more? Absolutely no. I'm gonna keep this, knowing that it can go back to £40 per share, whatever. So I'm gonna leave this one alone. The next company that I completely sold out of is EQIX. This one is a data center, sort of a data basically center company that is a REIT. It's been in the portfolio for about less than a year. I think I lost about £20 or whatever it was, but it hasn't done anything. When I bought it first, I needed a REIT to add to the portfolio that I needed. Thought maybe it would be a good one to add to the portfolio. And then of course the issue I had with it is the fact that I thought with AI and whatever is happening with the data centers, this will tag along and do well overall. But it hasn't, and it has come down a little bit. And when these companies come down, because they have a very high debt levels, in fact I can show you in a second, okay, the very debt levels for this company, okay, there we go. So it's $20 billion. And what that means, I've done the calculation here. What that means, in fact, if I times it by 100, you'll see basically if you divide it in order to find the Sharia compliant side of things with the interest bearing debt side of things, if you divide that basically the debt level, the total debt by the market cap and times it by 100, you get basically 28% in terms of that. Normally we're looking for 30 to 33 sort of. So the fact that basically the stock has come down a little bit, I already have one that became Sharia non-compliant because of that. But if I use the market cap of 24, of course this changes. If I use 36, it's completely changed. So I'm basically thinking about trade compliance side of things and the fact that it hasn't actually tagged along. Yes, there's a lot of bullish people basically talking about the company, but in my opinion, I think there are other opportunities, okay, better than this one out there. That's the reason why I sold it. I only had 2 shares to be fair, and I was hoping that it will come down a lot more than it did. I was hoping I can get it below 600. I didn't. And if it went up a little bit, even if you look at it for the 1 month, it's only up 1%. For the last 6 months, which I've probably had it in the portfolio about 15% down or so on, and then a year to date basically. So I've lost about £20 or whatever it was. So I've completely got rid of it. So that's the moral of the story. So now what are we buying? This is the exciting part. By the way, do me a favor, if you haven't joined us in the Patreon account, please do so. It genuinely helps the channel. It helps me to pay off a lot of the subscriptions that we use for FastGraph, for Qualtrip, for example. Qualtrip is one of those platforms that I've been using lately, which is quite nice to basically sort of use. And also same goes for Seeking Alpha. So there's all of these platforms I have to pay for, and it genuinely helps basically if you can join us in the Patreon account. If you can contribute to whatever you can, that's absolutely amazing. If you can't do that, please just share the videos, like, subscribe, and of course share it with your family and friends and so on. So what I'm going to do now is basically show you guys the stocks that I'm buying and the reasons why I'm buying these companies. And the first one we're going to talk about today, let's get started with the first one, and that is Intuit. Intuit is one of the companies that I've used to have in the portfolio, sold it, got some profit out of it, and then since then the company it's actually come back quite a bit. At this point in time, it has a free cash flow yield of 3.4%. Now, if you look at this company, basically with regards to the price out of it, year to date, this company is only up about 8% in comparison to the S&P 500. I genuinely believe moving forward, the software companies will bounce back. So companies like Salesforce, this one, Adobe's, and so on, have been left for dead completely in comparison to basically the semiconductor companies, the AI companies, the Googles and whatever, okay, and the Amazons and so on. So yeah, I think this company is in a good position. It's basically price wise for the last 6 months is actually down 11%, hence why I decided to buy more. So decided to buy initially. It was $805.7 per share. It basically in July of this year, and right now, as you can see here, it is, well, let's see the price, $674 per share. Basic revenue is growing fast, which is quite nice to see year after year. Each segment of their business is growing. When you look at the revenue by service and product as well, it's basically heading the right direction. EBITDA, you probably will not see something as beautiful as this ever. Probably the companies that similar to this one is MasterCard and Visas and so on. Net basically income is great. Basically look at this. The earnings per share is heading the right direction. It's been heading the right direction for the last whatever years, and this is one of the reasons I love this company with the free cash flow. Free cash flow is growing massively. Free cash flow per share is heading the right direction. They do have tiny bit off, which I don't like, the basically compensation side of things, that they give to shareholders. Hopefully they will reduce that as they go along. It has increased, but it increased with the free cash flow heading the right direction. And look at this beautiful graph of dividends, which is one of the reasons I like the company. And shares basically outstanding is declining about 0.35%, which is absolutely fine. So from 2002 up until now, they have been buying back their own shares, which is quite nice to see. And overall, yeah, great company in my opinion. And if we look at the valuation side of things, If you look at the fast graph and use the basically normal multiple, which is basically that 38 where the company has been trading over the last whatever years, if you bought this stock right now, by the time we get to 2028, July of 2028, you'll be happy. You basically, your 10,000 will become 17,450 pounds, or total annualized rate of return of 23%, which is quite nice to see. Even if that doesn't happen and basically the stock isn't basically, let's say, in trading in the 20s, you'll still be making up basically money. So regardless of where it is, I genuinely believe this is one of the companies that I should never have sold initially, and I'm going to hold on to a very, very long time. Now, if you look at the Morningstar valuation, this company is basically it has a price target of $720. If we go in here and have a look at let's go in here. Okay, let's see what Wall Street is saying. As you can see there, basically about 90% upside, $800 per share is where they think. And also, like I said, Morningstar is saying $720 per share. So they're both higher than where they should be right now. So what I'm going to do now is buy 2 shares of this company. I already own 5 shares of this company, I believe. There we go, the 5 shares. So what I'm going to do now is basically buy 2 shares of this one. Should be about £1,000 sorry. And I'm going to send that to Mr. Market and then leave it alone. Okay, so that's the first buy. So that's the first one done. And just also to, but before we finish, so just to show you another thing about this one is with regards to earnings side of things, because I want to make sure companies I'm buying are actually growing their revenue, their EPS and so on. And this one is basically double digits every single, expected to grow about double digits every single year for the next whatever years, which is quite nice to see. Right, the next one we're talking about today is Salesforce. So Salesforce is a company that I actually own in the family portfolio and also in this portfolio as well. I think I own about 21 shares or whatever it is. I really genuinely like this business. I've been talking about it for quite some time. Free cash flow yield of over 5%, which is quite nice. Revenue head in the right direction. If you look at basically the price right now, you basically last 6 months is down. A year to date is down 20%. 20% into basically year to date. So yeah, I don't think this is a no-brainer for me. Everything ticks the right boxes. Look at the free cash flow, look at the EBITDA, the net income, the starting paying that dividends, and EPS is since they become positive. Of course it is a little bit up and down, but over the last basically 2 years, and it's basically going up, and I think it will continue to do that as well, which is quite nice to see. And shares outstanding basically are also declining, and I think they started buying back their own shares, if you like. So they return about 4.2 billion to shareholders, including 3.8 billion in share repurchases basically, and basically the rest of was the dividends. So which is quite nice to see. They're buying back their own shares, they're giving you that dividends, and the stock right now is undervalued according to Morningstar. $325 per share is where they think the price should be. If we use the fast graph normal multiple and you bought this stock today, you will not be doubling your money. Basically it's 132% basically by the time we get to 2028. Now even if you say that PE is maybe too high for this company, is 40 PE, maybe it cannot because of the earnings and all that basically whatever, then even if you bought it and you were talking about, let's say, that 26 whatever PE, and by the time we get to 2026, you basically total annualized rate of return will be 26%. So which is absolutely amazing. So this is another company that I really like. And if we look at, for example, Wall Street, right now they are saying it is a buy and 25% higher, $330 per share. Right now is 260 something. If we look at the earnings expectations as well, again another double digits and similar thing when it comes to revenue side of things. So what am I going to do? I'm going to buy more of this company, not this one. Let's go back. That's the wrong company. And Salesforce, I'm slightly up, I think. There we go. So it's slightly up about 6%, but I don't really care. I know this is one I'm going to hold on for quite some time. Like I said, I own 21 shares, 21.8 or so of shares. So what I'm going to do now is I'm going to buy, where's my notes? So I'm going to buy 8 shares and 8.2. Let's go with that. Okay. So that's about £1,600. Send it to the market and leave it alone. Okay. Again, you don't have to do any of these things. Just don't buy it because I'm buying it. You just have to be careful on what you're buying and so on. Okay. So that's sent it to the market. Let's now talk about the next one this one will surprise you. It will really surprise you. And by the way, if you haven't pressed that like button, please do so. It really genuinely helps the channel. Now, the reason I say this will surprise you is because the company I'm going to talk about right now is NVIDIA. And the reason I'm laughing is because a lot of people think this company is really, really overvalued at this point in time. It's done absolutely amazing job over the whatever years, over the last few months. A year to date, basically, is up 40%. Now, I should say up 40%. But last 6 months, about 31%. Just this month is actually about 6%. And then basically last 5 days up almost to 10%. So why am I buying this company? Let me show you the reasons why. Okay, there's not that many companies that are expected to grow this much. Again, that's the expectation. I'm willing to take a little bit of I'm not a betting person, but it just sort of a bet that some of these will come true. And even if it does half of these things, I think this company is probably one of the best companies out there. Look at these forward PEs. That is not normal for a company that is basically expected to grow this much. This company right now, if you compare this one with Broadcom in terms of like valuation side of it, is actually cheaper than basically what is it called, Broadcom. Look at this PEG ratio. The PEG ratio for the trailing 12 months is less than 1. Why? Because of the growth expectations and where the stock is right now. Wall Street is very bullish on this one. Okay, I don't like following Wall Street's footsteps, but again, $250 per share, that's 34% almost basically higher from where we are currently. And if we look at, for example, Morningstar valuation, which I do trust, and I've always said to you guys I like this, it's $240 per share is where they think the price should be. 188 is where we are right now. That makes the company 4 stars right now, which is again absolutely ridiculous, right? If we use this, okay, let's go on here. Let's find out NVIDIA, and we are going to use the estimates that's been on basically Wall Street, which is about that 40. If we use that, okay, right now we bought this stock, you will be doubling your money. So by the time we get to January 2028, 3 years from now, if you basically leave it alone, you don't add a penny to it, you will have $22,589 for that 10,000 US dollars that you've invested. If we use the normal multiple, which is this PE of 48, where it's been over the last whatever years, okay, and again, basically that will be about 25,000, basically 25,000 US dollars to your 10,000 initial investment. So I genuinely like the company. And when you look at this, some of the metrics this company has, again, of course it has gone up so much. It seems quite expensive, basically stock to buy right now, but the growth is there. Okay, that basically, look at the massive EPS growth, of basically the free cash flow growth. They just pay tiny dividends. They don't really care about that, and they're buying back their own shares a little bit, whatever. They've got excellent free cash flow of, I can't remember how much it was, $60.8 billion of free cash flow, which is absolutely amazing to see. So the reason I'm actually adding to this one is because it's been in the portfolio. I don't want to sell it. I really like the business. It's been growing on me. I've done quite a bit of research to figure out basically where the company is heading and so on. And I genuinely feel like maybe I should have at least 5 to 6% of this portfolio as this company and see where it goes. And taking that little bit of risk. Again, you don't have to do that, but I'm going to do it. Okay, so we're buying 5 shares of this company today, and of course we're going to average up, because my average before this is $102, let's call it $103. Okay, I'll let you know once that is executed. I'll let you know exactly how much I've averaged up. And again, I'm not worried about averaging up if it's a high quality business that I genuinely trust. In fact, that got executed very quickly, so we are now $124, okay, or just below 90. Let's just call it less than 94 pounds or 120. So yes, I have averaged up, which is absolutely fine. Like I said, I'm not really scared of doing that. Right, we come to the final company that we're going to add to today, and that is, no surprise, MSCI. It's another company that I have in this portfolio. I've had in the portfolio for quite some time. If we look at the earnings expectations for this one, you will see that's also growing nicely, expected to grow nicely over the next whatever years. And if we look at the the Wall Street expectations, we've got 9 strong buys, 6 buys, and 1 hold, 1 sell. And as you can see, about 12% upside from where we are. 650, basically $6 per share is where they think the price should be. Morningstar is saying 650 as well. So these two sort of agree, if you like, for the first time. And yeah, so that's about gives 4 basically stars. Right now is $581 per share. Again, another genuinely great company that I've had in the portfolio for quite some time. I've been averaging it up, basically down quite a bit. So today we'll probably average up a little bit, but of course with free cash flow, the net income, the EBITDA, this is another company that has recurring revenue side of things, so they retain a lot of their customers and so on. Shares outstanding is declining. The dividend has been absolutely amazing. So overall, really great company. And if I show you, let me have a look at some of the ratios. If we use basically things like return on capital, return gross profits, operating margins, the profitability side of things, is probably one of the best companies out there. And look at the fast graph, as you can see here. If we use the normal multiple, which is about that 44 where it's been over the last whatever years, if you bought the stock right now, you'll have about $17,216 by the time we get to December 2027. But if you even reduce that slightly, okay, so basically that 31 PE or so on, that you'll be making at least a 10% on top of your money, which is about you'll have $12,177. I do own the stock already, so whatever's left, that 200 something will be invested in. Okay, I'm gonna basically, because I've got already 14.5 shares, it should give me closer to half a share, if you like. There we go. That's it. And yeah, that's the last buy that I wanted to make today. And the reason, like I said at the beginning, I want to share with you guys these kind of things is hopefully to motivate people out there. And by doing all of this now, I bought every single company that I bought today is a dividend growth company, apart from NVIDIA, of course, is a dividend growth company. In my opinion, Salesforce is a great company. Intuit has been increasing the dividend for quite some time. If you look at the basic company, MSCI's, the dividend is absolutely amazing. Yes, but then of course the most important thing is not just the dividends, also that price appreciation. I want to hold companies that are 20 years from now, 30 years now from basically are still growing and still doing things. Okay, but also I do have companies that might not be around in 50, basically 20, 30 years from, well, I'm sure they will be, but might not be around and so on. You never know. Genuinely, anything can happen in this market. But my goal has always been, of course, the income is great, but build a portfolio that will potentially pay me in dividends, and of course I can sell when I need to some of the stock that I own to take profits off the things off the table and so on, and to reinvest it to use that cash for whatever I need it for. And yeah, inshallah, we will talk about my 2026 goals inshallah in the coming videos. I don't want to make this video any longer than it needs to be, but if you are enjoying this type of content, if you genuinely appreciate what we're doing here, please just like the video, subscribe to the channel. Of course, let me know if you have any questions. What are you buying? What's your portfolio look like? Share it with the community, please. Don't just make me, I don't want to be the only person who's sharing good practices. I'm talking about good practices. There's a lot of wonderful, genuinely good brothers. May Allah reward them for their actually, commitment to the Discord. But they are sharing great practices on the Discord. If you go and join them, it's free. The link is on the description. Join them, talk to them, share your portfolios, basically ask questions, inshallah. Especially if you're new to this thing, it can be lonely at times and can be difficult at times, but trust me, you'll be fine. Just go and speak to these people and let me know if you have any questions. And don't forget to join us at the Patreon account. It might cost you about £5, but genuinely makes a huge difference to the channel. Have a wonderful day. Assalamu Alaikum.